SARS, like many other tax authorities around the world, are under huge pressure to find further revenue and sources of tax for the government coffers. SARS have been mulling around a number of ideas over the last few years, and most recently have decided to specifically do away with some exemptions in regards to South Africans who earn money internationally. This is a huge change. It's a huge step away from something that's been established for many, many years. A lot of people in the street will know it as the 183 rule, where even though you are a South African taxpayer, the fact that you worked and lived outside of South Africa for more than 6 months in a year, you are exempt of paying tax in South Africa. And SARS then making fundamental changes to that exemption, effectively drawing these people back into the tax regime and ultimately getting them to pay tax again. The implications of this is very simple. People who've previously not paid any tax due to specific exemptions will now start paying tax. These people generally are working offshore, generally in higher income positions. So we're talking about a 40%, 45% income tax that's going to be applied to their income now that previously hasn't been. Let's start off by saying that if you're a South African resident in any way, shape or form, you should sit up and pay attention, because this potentially affects you. So whether you've been out of the country for 5, 10 years, 15 or 20 years, or you're one of the international workers spending 5, 6, 7 months a year out of South Africa, this will potentially affect you, because SARS are looking at how you are resident in the country, looking at stuff like assets, looking at family connections to determine whether or not you are ordinarily resident. And if you fall foul of their determination, you will start paying tax where previously you haven't. Yes, pretty much. If you're a South African expat, and unless you've specifically done something called financial immigration, which very few South Africans have, officially gone through the South African Reserve Bank route to do so, this will affect you. Again, for the sake of a phone call, for the sake of getting in touch to at least discuss your specific situation, I think is well worth doing right now before time runs out. The line in the sand in regards to these changes is the 1st of March next year. So if you are affected by any of this, if you are going to be one of the unlucky ones that went from 0 tax to 45% tax, then now is the time to act. Speak to a professional. If there are solutions to be had, it takes time to implement them. Time to renegotiate employment contracts if the solution is that simple. But they have to be formalized by the 1st of March. So now is the time to move on this. A lot of people believe that pure time spent out of the country kind of negates any of these problems. I myself was an expat for 11 years. I lived in the UK for 11 years, but I always saw South Africa as my ultimate home, and unfortunately SARS would see it exactly the same way. So no matter how many years you've spent overseas, if you have any connections through asset or family to South Africa, SARS can deem it in the same way, and therefore you will fall foul of the new arrangements being put in place in March next year. Financial immigration has been bandied about a number of times now. There's a lot been written about it in press, etc., as whether or not it's a sufficient solution for people who want to avoid the changes or don't want to fall foul of the changes that SARS are bringing about. Unfortunately, it's not that simple. Financial immigration in itself is an incredibly technical decision. It's affected both by SARS and, more importantly, the South African Reserve Bank, and has huge long-term repercussions on that decision. And I'm sorry, it's just not appropriate for most people. SARS and the Reserve Bank simply won't approve your application if you have houses here, family here, and have an intention of certainly returning back to South Africa at some stage. Financial immigration is a potential solution for specific individuals. I'm not discounting that, but for the vast majority of people, it's simply not and shouldn't be considered. If you understand Carrick's history, you'll understand that our very DNA is international wealth advice. So this is what we do on a daily basis, understanding what options are available to South Africans in a changing market, and therefore assisting them in making the best decisions. Carrick is a bespoke wealth advisory firm who specialise in integrated wealth advice, which means we deal with both international and local advice, having the unique ability to see our clients as global citizens. Well, firstly, block out the noise. There's a lot of noise about these types of things. I see a lot of it on popular social media sites, expat sites, etc. Unfortunately, it's too technical, it's too individual to have some type of one-size-fits-all solution out there. I highly advise any person who is slightly concerned, even slightly concerned by this, to get in touch with a professional. If nothing else, to have the peace of mind that they're not affected. But certainly, if they are affected, to understand what the options are and start making the right decisions going forward.